sharing with you slides in a minute. Okay, welcome everyone. We'll start recap for lesson 2 and then we'll go through lesson 3, which means LO3. So during last lesson, we had some discussion on companies and insolvency law. We'll go through. And during lesson 1, we discuss about contract, different element of contract. We discuss about invitation to treat, and we discuss contract is supposed to be offered and accepted. There need to be a consideration. There need to be a legal binding between, and there need to be a sound mind. If somebody has disability not mean only physical disability, can't understand, can't interpret the information, and it's not a contract until there is offer and acceptance, sound mind, and the ability to. So that's is one of the crucial element. We discuss about the date of postage. It can be a date of contract because when you post the contract term and condition, you agree, that can be, and those we can look around in further. So this week, the lesson 2, which was, the company, how we can register the companies, partnership, but we know already types of ownership. The company, we can start the business as a sole trader, which is one person. We can start a business as a partnership. We have a Partnership Act 1890. Normally, we follow in the UK, and if we register the partnership LLP, which is most of accounting firms, if they are a big firm, normally they are limited liability partnership, they registered and then liability become a limited. Okay, so memorandum article of association normally is why we are in the business, what role and responsibility in compliance procedures. And limited company, of course, the limited liability, we follow the Company Act 2006 according to indicative contents as well, and the company laws. Micro and medium-sized companies, we can look around employees and their, if we do audit and things, so we need to be follow those legislation. The capital and transfer appointment and removal of the directors, that will be in our discussion as well. Insolvency laws, and a lot of of course companies are the limited liability, like many people have the bounce back loan during COVID-19. They think the company has the limited liability, they can close, nobody can claim from their personal assets, but it can be unveiled if they are directly involved in the criminal matters and the information not there. So that is a huge discussion going around, the compliance side as well. So we need to look around those perspectives. Okay, so company is a legal entity which has the legal personality. It's an artificial person. It's not a person, but they have to be treat other human being equally in equality laws as well. So we have to look around the separate legal entity, shareholders, actually the owner of the company. And last lesson 1, we discuss about agent and agency theory. We discuss the principle of the shareholders and director are the agent of the shareholders in the public limited company. So we had a discussion in. So if you want, company can be two types of companies. One is a public limited, one is a private limited. If you want to register the company as a public limited, you need to 50,000 worth of the investment. Okay, so in the past, there are the plenty of laws like nationalities in the time of the war, illegal to trade, with the enemies. So we have here the control, trading standard, those we can look around. There are many of the case laws which we can embed, in the histories and the past, those the court rulings. If you want to, in your assignment perspective, and we'll go through, we'll look the task and we can embed it, one of these case laws. So defendant in this case, the UK incorporated company was owned by the 5 individual corporated in Germany, and only one individual was a British. So that's which we claim the claimant needs not to discharge their debt to defendant since effective control. So later was the enemy's hand, hence to do so would be trade with the enemy. So we can look around. One of the common law is the wider interest of the public. Any other legislation can be void if it's not in the wider interest of the public. So please always look around the wider interest of the public. That's the key element. Okay, so company can be limited and unlimited. No need to be filed accounts by guarantee. So we can look around those perspective and the definition registered as a public limited company, which we can. Of course, they have the right to issue the shares to the public, which we can. The capital, which we mentioned, the £50,000 worth of. Of course, they can, if they need the money, so they can raise the finances to issue the shares and the debt financing. Two types of major source of finance: debt financing and equity financing. Normally, the debt is cheaper than equity. Debt is cheaper than equity. Why? Because at the moment, do we know how much is the base rate? Anyone? We all know, yes? The base rate, basic interest rate now. Okay, so base rate, which is basic interest rate at the moment, is a 4%. Went down last week, and it was 4.25, and before it was 5.75 as well, and it was 0.01% back in Feb 2022. So we can look around, that's huge increase in, so we need to be look around those perspective and the cost, and then we can decide what is the sources of, because any interest you paid is treated as expense for the business, and you can pay off, and then you minus the expenses of the interest, and then of course you pay the tax on the net profit. But if you have the equity financing, the dividend you paid after the tax. So the dividend is not treated as expense for the company. So that's the debt is cheaper than equity. Okay, so of course we sometimes we don't pay the dividend. No one really asks, but shareholder really expect it. So we can look around those incorporation certificate, minimum directives in public and private limited companies, minimum twos and minimum ones. So those we can look around the key difference. So public companies must have one or must be qualified as a secretary, and no need to be in. Account must be audited and need to be lay accounts before the general meeting and must be filed within 9 months. Audit, of course, we can look around those in public limited companies. Account need to be AGM, of course, must have the AGM annual general meeting where, of course, the selection, the voting rights. So we can look around ordinary and the preference share capital. That's the key, the nominal values and all the discussion can. So there are a number of consequences, being a separate legal entity, limited liabilities, which that's the key. Company enter into the contract, its own name. A company has its own credit scoring, like individual has the credit scoring, and we follow the Company Act 2006. Okay, so company offer in case of it suffer any injuries or anything, or the damages can be again the legal actions can be, and of course director will be responsible for the. There are the plenty of the case laws which can be, and we can explore those. So individual shareholders cannot sue for the wrong done to the company that they in compliance with any internal irregularities, but directors are, because it's mean agent of the shareholder, they selected and they should work in the wider interest of not because in the past was the theory is the shareholder wealth maximization or stakeholder interest is more important than just shareholder. Anyone who has any interest in the company, we have to look around the company law, which is essential. The law, governing the creation and operation of the registered company. We can look around different section of the company. We have 16 schedules and 1300 sections according to the Company Act 2006 legal amendments and the new section carry on. So we can carry on exploring those, such as the remedies available for the breach of the directorate duties, which we can. That's why insurance is one of important elements if you look at the company. So company law includes the part of the security regulation, insolvency law, which we can look around those perspective, and the security regulation. Yeah, so which we need to be registered. Of course, the shares can be issued, and those, the registered capital, we need to look around the nominal and the preference shares. Okay, corporate governance, that is one of the biggest issues, especially back in Theresa May government when the Barclay Bank paid £2 million bonus to the CEO of the company, and the dividend not being paid to the shareholder. That's the question mark when you're not on the profit, and that's how we can go on, because end of the day money is owned by the shareholder. Actually the owner of the company is shareholder. So is the legal term, rather it's a label or heading under the which question how, by whom, and to what corporate decisions are should be. So that's why executive and non-executive and the tier system, the rules, and not just the rule is the principle morally correct. The rule is, if you don't follow the rule, is a criminal matter. If you don't follow the principle, your memberships and things can be revoked. So those we can look around in that perspective. So view and the various sources of the company laws, which is carry on the Company Act itself, Insolvency Act, of course, Director Disqualification Act. So we can look around Financial Services and the Market Act and Criminal Justice and the Company Act back in 1985. Finally, we can look around the Company Audit, Investigation, Enterprise Act. These are all those we need to be further explored in those areas. So first are assessment criteria under learning outcome two. So when we'll do assignment, when we'll do the task, it can be, because we divide our discussions according to the assessment criteria. So assessment criteria, command verb 2.1 implies which we need to analyze the requirement of the company laws, formation, financing, and administration of the company. So if we are discussing these, we are meeting the criteria. The company can be public and private limited. What is a company? Is the form of the company, which is although the other business structure exists, but we can start a business as a company. Of course, if we go the company house, each have their own advantages and disadvantages as the forming company. Of course, it's a legal requirement, and we have to follow those the legal. So forming a company maybe bring other advantages too, and you maybe find it's easier to raise the finance. Of course, the separate legal entity, the little liability, administrative benefit forming the company, the legal and regulatory framework is in place, the company's account you can open on the company's name, which we can look around those perspectives. How form a company? A company is formed by filing a series of the documents which we can register in the company house. Even we can register with other authorities, depends, like if you want to get a license, memorandum of association or article association. These are the two important documents we need to be explore. Of course, the reason the company name for the private must be, and the word limited, and no two English companies can be have the same name. This is other gray areas. People slightly play with the name, with putting the dots and things as well. So those we need to be look around. It can be other company, can be, of course, we can register the logos and things as well. The name of the same as are like to be existing registered 12 months, and we can look around no misleading indications. So we need to be look around the misleading information or undertaking were given and applying the name, which we need to be look around. Those perspective and the shareholders and the share capital. Shareholders, of course, we know the share capital. Always we keep, the share price is very, very low at the beginning. The registered capital or the nominal value. What is the nominal value? Is the face value of the shares, which is registered in the company house. That's, which we normally keep very less, if you look the nominal value and the current market value of the share. So the difference between the nominal and the current value is called share premium. So that's which we need to be in that perspective we can explore. No, that's fine, Mark. Thank you. Okay. So which we can look around considering at this stage the possibility of having more than one class of the shares. So we can look around the preference shares and the ordinary shares. Do we know what is the difference, anyone? What is the difference between preference and ordinary shares? So do you know what is the preference and ordinary shares? We all know the preference share, ordinary share. Preference shares, in case of the liquidation, the company must first, pay to the preference, and they have normally fixed dividend, and the ordinary shareholders, they don't have the fixed dividend. They normally paid, at the end of after paying all other parties. That's which we need to look around those perspectives. And directors, of course, the important component of any company, the board of directors will be yes. So we can look around the criminal records and things as well. Becoming director, not being in the past, involved in the money laundering and things as well when forming the company, and you will need to be considered who is appointed as the initial director of the company. Doing so, the following consideration: the minimum number of directors required, the form of the company depends, if the public or the private limited entity, So there is a two minimum visible under the directors, although they could be convenient, for the small company to have a large number of directors. That's, which we need to be. Director age, at least 16-year-old. English law does not have the nationality or the residency requirement. So it can be director even or other part of the world. So they can be registered as a company and the directors, and after the insurance in place, to protect the director claims of wrongdoing. So which is business, the indemnity and insurance and things, those things good to be in place. And forming a company, and you will also need to be considered whether you like appoint the secretary. Of course, we discussed earlier in our comparison with public and private limited companies, we supposed to be as a public limited company must have secretary. We need to be look around the minutes and the books and the registered administrative requirement, which we need to be follow according to the registered office. Of course, the registered office should be in the UK. The tech purposes, the company where the head office is registered, they are liable to pay the taxes where. So those, we need to look around those perspectives here as well. If we discuss, we can meet the criteria. Constitutional, which we can look around two key, constitutional document, which the companies are required to be the Company Act. So which we can look around the memorandum of association, which is must be a standard form, simple stated the initially, subscribers for the shares in the company wish to be formed the company under the Company Act, have the agreed become a member. Article of association is a contract between the companies of the each, the shareholders and the regulator, the way in which the company is conducted and deal with the matters of the payment and dividend and appointment and removal of the directors. Article of association, which is also important document, which we need to be look around those perspectives. So please, that's one of also crucial, the model article can be used, or you can write, special if you want to. That's, it can be. Article association includes the provision of the cover all the manner of the check of the voting rights and dividend rights, the definition of the directorship and the scale of the shares, they will be assessed, can. Okay, then please, we looking 2.2, which we can look around the role and responsibility of the company director, officers of the shareholder. The Company Act, 2006 state the certain general duties of the director of the company. The act, through the two parties, the people, the shareholders, and the board of directors, directed, the charge, the management, and all the issues, need to be well done in the best interest of the shareholders and the general public, not just only, So we have to look around the balance approach and the stakeholders, which is mostly we applied now. So directors are effective, the agent of the company, then appointed by the shareholder. That's, which is agency and agent theory, which we can duty that of the director with the responsibility, promote the success of the company, work in the wider interest of the company, not the interest of themselves, back end are not involved in the bribery. So being promote are things, buying the thing from there, they get the back end commission. That's one of the other biggest area at the moment in fraud. So exercise independent judgment, so which we can exercise the reasonable core skills and intelligence. which we can look around the wide the conflict of interest. That's one of the areas which is we can look around the five code of ethics in the perspective. Popular people chat and after we discussed in the last lesson. BAT pay UI pay as you earn, the pensions and all confirmation statement. These, we need to be made that tax returns is the responsibility of the director. The company directors can be held as personally liability for missions committed, during the course of their appointment, including unlawful discrimination, which is being treated the favoritism. Those are which is the Company Act 2006, Equality Act 2010 says, you can't really discriminate based on race, religion, and color. So Bribery Act we have, which is 2006 also. We have the money laundering. 2010, it can be up to 10 to 15 years imprisonment. Those involved in and disqualified are involved in the money laundering. That's the huge areas. Safeties of the directors and the shareholders to attend the general meeting to receive the shares of the company's profit in shape of dividend, which we can distribution, the duties of the shareholders, pass resolution, ordinary resolution, and special resolution. Normally, ordinary resolution is, and then of course, the power of which we can look around, especially, resolution pass 75% majority in the favor of the vote, and they want special resolution. We want to change the directors and things as well, which we can. Any question, please, if you want to ask? Okay, hope everything fine. If not, please, you can ask. Explain the process of insolvencies. So we can look around insolvency laws in that perspective, and the company don't tend to be continued, is existent forever. Of course, we have the BHS, we have the brilliant construction companies, we have plenty of others companies, those not sustained before the company, cease exist and the use of the legal term ongoing operation, which we can look around the assets are sold and the proceed are the sales is used to pay their home they owe the money. That's first off we can look around the creditors. Those are the key, liquidating the company. Some are the salaries to the workers end up are liquidate able to pay their debt in full, which we need to be look around. We have an Insolvency Act 1986. So that's gave us a term of insolvent companies when in mid 1980s the law governing insolvent company winding up the moved out the company laws legislation into the specific insolvencies legislation is made up the sense to deal with the solvent winding up. So that's which we can look around those perspective and we follow the Insolvency Act 1986. So insolvency term relevant to both companies and individuals, UK, and the term bankruptcy is used only that refer to the insolvencies of the individual, not the company. So legally incorrect, the refer the company going bankrupt. So we can say it's going to be insolvent, it's going to close it. So finally, which we can look around the winding up and the asset of the company and the process, that can be discussed under this our assessment criteria. Insolvency law is highly detailed, specialized area of the legal practice requiring the study of specialist text, for the full understanding of the scope and complexity of the Insolvency Act. Administration, the process of designed to facilitate rescue, the financially troubled companies, which company went into administration. Administration said we will do this and that, the liquidation, the process by which the company's wound up is going to be closed, that's, which we can during the administration and liquidation process, which we can various powers include, the power to bring the legal action and review the challenges, validity, the certain transactions, the transactions and frauds, those can be and directors can be responsible. And the security provide, protection beside the money in the security. The term security covers complex range of the investment product, which is secure like a bond can be, which we can look around secure or is it pledged against the company's assets. So conduct investment and the market, which is investment traded, increasingly regulated market. We need to be looking at those legislation. Okay, so global financial crisis back in 2008 and up to 2012, a lot of things changed, a lot of companies, the especially the mortgage and the market and the property industry, that's especially in US, that's hugely impacted throughout the world. And we have a lot of new legislation, financial conduct authority, potential regulation authorities, and the key security regulations, in the UK remain the Financial Services and the Market Act, which is still valid and which we carry on following and focusing on the movement of the source of the security regulation. So those we need to be discussed under if you want the governance code, the stewardship code, the director's responsibility that will meet, an insolvency process, which is under the Act of 1986. So insolvency is legally defined the company insolvent, unable to pay the debt, if it's either does not have the enough asset to cover the debt, or the value of the asset is less than the amount of the liability. So normally the asset, net asset, what is the net asset? Asset minus liability, net asset, and the goodwill is the difference between the net asset or the other people are willing to pay. That's difference is called goodwill. So those we can look around the company and might insolvent, the loss of the market, and the companies have not recognized the needs of the chain shrinking, changing the marketplace, the management failures can be loss of the long-term finance. The case studies can include the using the insolvency system of the creditors to initiate bankruptcy liquidation proceeding. So we can look around and we can embed those in our discussion when we'll do the merit criteria if you want. That is more than 30 days overdue. There is no dispute, regarding the undertaking the transactions. We can look around different scenarios and in the light of the insolvency of 1986. Was, but we can add a few bit and pieces examples according to indicative content and absolutely fine to meet the criteria. So 2D1 implies the aspect of the capital maintenance, which we can look around the capital maintenance. The concept state the profit should not be recognized unless the business has least nominated amounts of its net asset during the accounting period. So that's which we can, because when you're preparing an accounts and need to be audited and the auditors, and we need to be true and fair. The cash inflows and outflows increase those, the sale of the stock and the assets, the revaluation of the stock. We can look around here the different accounting standards as well, which is those impairment of the assets. That's which we need to decrease the assets payment and the dividend and other distribution to the shareholders. The perspective, the capital maintenance, the concept is which we inflationary pressures that can be used. The capital maintenance idea is concerned with the net, the change. The account balancing during the accounting period. That's why the revaluation of the assets and the equity, the statement of change in equity that need to be look around and follows. We need to look around the revaluation of the asset. And those limited company cannot reduce the share capital. So reduction of the capital under the section of the 641 Company Act 2006 can be reduced the capital at any time. Reduce are the cancel liabilities, partly the paid shares, and the company give up any certain claim of the money owing, and return of the capital in the excess of the company's need. The company reduce the asset by repaying the cash to its shareholders. Of course, shareholders can be paid off. So cash is the asset of the debit side, the shares of the credit side, which is your capital. And when we want to be, so we can debit and credit, and we can reduce and we make the adjustment. So that's which we can, because sometimes we buy back and sell off, so that process can be followed. Okay, yes, sir. So always we're looking the opportunity cost, like, if you have the enough cash in your accounts, you think, come on, why I'm paying dividend to the shareholders? I don't need the money. I will go in the open market, will buy the share back, from the shareholders, and we want more control because, we don't need to be. So that can be one of the point, because ultimately will help you to more control And if you want to do more future projects, then of course you need more cash. You can issue shares up to the registered capital. If you need more capital, you can call AGM, annual general meeting, and then of course you let them know we need more money. We issue more, and we can change, the registered capital with the company house. And that's the way we follow, because the perspective is looking the business activity and the economics environment and the opportunity cost. Yes, that's the key, which we need to be look around in that prospect. Any other question, please, if you want? Okay, so pass the special resolution, apply the code, confirm the special resolution. If the deduction involved the one or the two methods, the court must, require to the company to the settle the list of the creditors entitled. So that's which we need to be. The court must not, confirm the deduction until the satisfied the creditors have either consented to the deduction or they have the debt, discharged or the secure. So we can look around those, and the company must, file the document with the registrar of the company. The share capital of the public limited company falls below than the 50,000, because the 50,000 is the requirement. Okay, so procedures for the private limited company pass the special resolution supported by the solvency statement. Solvency statement stated the each directed that the company will, able to meet the debt within the following years. The insolvency state, without the reasonable grounds of the punishable by the fine and imprisonment. The copies of the resolution and solvency statement and the statement of the capital must be filed with the registrar of the company within 15 days. Those we can look around. So please, these are some additional definitions that is of the shares. We can don't have to be cancel the shares. Up to 10% of the shares can be held by the tradies, and which means they can be reissued without the formalities. The general rule shares, which are the purchased by the company, must be cancelled, and the amount of the company shares account reduced by the nominal value of the cancelled share. So the nominal value, as we said, is the face value of the share. The market value is different. One is the value in use of the assets, which we maybe heard about. Three types of the values can be. One is called economics value, or the value in use. We can look around the market value. Like if you have a Windows 98 CDs, like a software, maybe when you bought the inventory, that was £250 a CD, but now no one is willing to buy. We have to, if we are showing in the book of account, doesn't mean we misleading the information. That's the real value. So do we need the value adjustments of? Okay, so under section 724 of the Company Act, the stock exchange alternative investment market can be buy and hold and resell the shares, and the shares must be qualified. The shares which are listed on the London Stock Exchange and with the different index, which we can look around under section 2. The Company Act share must not be give the companies any voting rights in the respect of the shares. In addition to the no dividend or other form of the distribution can be made in the respect to them. Any consideration received on the sale of the treasury shares to be treated, which we can look at on profit of the distribution purposes. These are different sections of which we can follow. This Company Act, of course, there are many sections which we can, and the notice must be. This is if we are writing and we want distension criteria, so we can. So please, a lot of links there which we can go back to the gov.uk. We can look around the Company Act, and we can pick the things and we can write as well. That's more authentic source of information. There are plenty of books, and we'll do the assignment discussions which we'll go through in that perspective. Any question here, please? Is it okay? Any question if you like to ask, please? Okay, so that was let's now please